What if everything you believed about getting rich through stocks was a beautifully crafted illusion, designed to pull you in just before reality hits? There's a rush that comes with the first click, the first trade, the first taste of possibility. I remember the thrill, watching numbers flicker on a screen, the green lines stretching upward as if they were inviting me into a new world of wealth. In that moment, I believed I had found a secret door, a shortcut to success that others had missed. I was captivated by tales of ordinary people who turned pocket change into fortunes, stories that filled forums and headlines, convincing me that all it took was guts and a little luck. But what I didn't know, what no one ever tells you when you start investing in stocks, is that the stock market is less a game of intelligence and more a crucible of character. The truth is, the market doesn't reward the smartest, the quickest, or even the hardest working. It rewards those who are psychologically prepared to endure its storms. I was so eager, so sure of my own cleverness, that I didn't see the pitfalls lying in wait. I wish someone had told me that for every headline story of rags to riches, there are thousands of silent failures, people who lost their savings, their confidence, their dreams. No one told me about the graveyard of portfolios, the hopes that vanished in a sea of red numbers. I didn't know that behind every ticker symbol was a company with a history, a balance sheet, a leadership team that could make or break its future. I didn't know that buying a stock without understanding its debt structure or the motives of its executives was akin to gambling in a casino where the odds were never in my favor. I learned too late that billion-dollar companies can be hollowed out by debt, plagued by scandals, undone by a single bad decision from the top. Flashy headlines and media hype can be weapons, not signals, used by insiders to lure retail investors in just before the rug gets pulled. I didn't know that the most dangerous moments often feel like the safest, and that the loudest voices in financial media are sometimes echoing someone else's agenda. I thought diversification was holding a handful of tech stocks, until a single sector downturn wiped away nearly half my portfolio overnight. Sudden corrections are ruthless teachers. Every dip, I believed, was a buying opportunity. That's what all the books and gurus said. But some dips are not bargains. Some are warning signs, the start of a long, painful decline. I wish I'd known to distinguish between volatility and value, between an opportunity and a trap. Most beginners, like I was, confuse price swings for golden tickets. They chase after movement, mistaking chaos for growth, and let their emotions dictate strategy. No one warned me that my greatest enemies would not be the market itself, but my own fear and greed. Two ever-present voices, whispering conflicting advice in every moment of uncertainty. I wish I'd understood that charts and headlines are only the surface. The real forces that shape markets are global, systemic, interest rate hikes from central banks, economic shifts in distant countries, supply chain disruptions that ripple across continents. One policy change, one geopolitical event, can devastate entire sectors overnight. And yet, these forces are invisible to those who only stare at screens, chasing patterns that don't tell the whole story. Financial media often carries the tune of Wall Street, not the truth. Analysts with impressive credentials can mislead millions, either through bias or error. One viral tweet from a celebrity can sink a stock in minutes, while armies of algorithms execute trades faster than any human could react, distorting logic and making prediction impossible in the short term. I didn't understand that while insider trading is illegal, information asymmetry is real. The best information is rarely available to the average investor, and the market is not a level playing field. Paper gains are seductive. It's easy to feel rich as numbers climb, but profits aren't real until they're secured. Chasing the next Tesla, the next big thing, is tempting, until you realize that hype and Ponzi schemes wear the same mask. I wish someone had taught me about liquidity, not just as a technical term, but as a lifeline. The worst time to sell is when you have no choice, when panic forces your hand and losses become permanent. Real professionals spend more time thinking about risk than about reward. The best investors are often the most boring, holding steady, doing nothing, letting time and discipline do the heavy lifting while the world panics around them. I wish I'd known that investing is not a sprint, but an endurance test. It's a psychological war where patience is a weapon and panic is fatal. Conviction in a stock should be built slowly, on a foundation of research and understanding. But it's frighteningly easy to lose that conviction in seconds if you let your emotions take the wheel. Compound interest only works if you survive the storms. Most people never make it through the first few years, undone by impatience, bad luck, or the inability to withstand loss. Market cycles are as real as the changing seasons. Bull markets can last for years, but winter always comes. It's not a question of if, but when. I wish I'd questioned every shortcut, every promise of overnight success. I wish I'd realized that wealth in stocks isn't about finding the next superstar. It's about avoiding catastrophe, minimizing mistakes, and staying in the game long enough for probability to work in your favor. The discipline to do nothing, to resist the lure of action for its own sake, beats intelligence every time. Stock investing is a craft, a lifelong pursuit that punishes arrogance and rewards humility. It is not a side hustle, not a lottery ticket, not a way to get rich quick. It's a mirror that reflects your ability to delay gratification, think independently, manage your emotions, and keep learning even when the world feels upside down. If I could go back and give myself one piece of advice, it wouldn't be a stock tip or a secret formula. It would be this: you're not just investing in companies, you're investing in your own endurance, your capacity to face uncertainty without panic, and your willingness to learn from every loss. Because the market's only true rule is that it takes from the impatient and gives to the disciplined. Experience is the only teacher that matters. Years later, I see now that my most valuable investments were not in stocks, but in understanding how the market works and how I work within it. That's the lesson I wish I'd learned from the beginning.